Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities, and E-mini S&Ps were lower again today. June contract trades in a pretty tight range, all things considered. It's going back to the end of at the end of March. We're looking at 2340 to 2360. We're hovering near the lower end of that range. We've made a few dips below it and above whatnot, but that's really been the range, and we're kind of threatening to break below it, and for obvious reasons. Risks are on the rise. Global geopolitical risks are on the rise and don't look to be backing down anytime soon. So I would guess that as we see these risks continue, as we see uncertainty continue, just on that basis alone, I think equities themselves will find themselves being pushed lower. We're not seeing significant moves though, and that is being reflected over in our friends in volatility. The VIX index printed its highest since the election, but certainly not generating any real buzz. We're not seeing any real fear being priced into the market. This is more of a concern index now, despite the fact that you've got a massive amount of calls that are open way above the market. We're talking about the VIX at like 24, 25, and 26. That is where these calls kick in, and the VIX right now just hovering around 16, while is elevated versus the norms, is certainly not telling me that there's panic out there. So equities kind of going down, lock and key with the VIX going up. Neither one is telling me that there's a panic. And likewise, if you look over at some of the riskless assets, treasury yields are down and gold prices are higher on a broader scale. However, equities just not showing the fear. So looking ahead, it's going to be a continuation trade for equities. They will continue to lead the market. They lead the market when equities trade down. It gives other asset classes a chance to trade. It doesn't necessarily have to be a huge trade. It's more of a momentum thing. And right now, with equities trading near the bottom half of the range, or lower end of the range, it's giving treasury buyers a reason to jump in. It's giving gold buyers. We're seeing a mixed trade in the dollar. It's been lower, but certainly could see a bounce. And I think that as we look forward, we can't forget the key earnings we have this week. Bank earnings come out, and that is usually what sets the table for Wall Street. So I think right now, minis on the lows, because of the geopolitical risk, because of the rising risks, and we haven't even mentioned the Fed or the European elections yet. I think that right now earnings are kind of getting a little bit overlooked. So look for earnings to maybe give stocks a little bit of life if they come in on the positive side. And that'll pretty much round out the week, because then we have a shortened week, we have the holiday, and then we'll come back fresh next week, and hopefully a lot of this geopolitical mess will be cleaned up. But then we have a lot of data, and we have a lot of events coming up down the road, including earnings. So it could be a rocky ride here for equities, but on the low end of the range means there's opportunity to the upside if we get a good start with bank earnings tomorrow. This has been Todd Colvin coming to you from the floor of the CME Group.